Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 26th. We are going to review, as always, the economic data. Today, mortgage is quite interesting and also wholesale inventories. And as you know, we are on earnings. We are going to review Microsoft, Alphabet, and some news regarding Activision Blizzard. And also, as always, and you like, we are going to perform some deep technical analysis with volume on the Nasdaq and some other markets that look really interesting after yesterday's sell-off. Today looks like everyone is at least buying some dips. So we are going to see how that is happening right now. But first, let's start with mortgage applications. 3.7% coming from -8%. So despite the high interest rate, applications are going higher for mortgages and refinance index going higher. So this is super interesting because I think people is really demanding those mortgages, even though interest rates are at high levels and they are continue higher at least a little bit. That's really surprising. Durable goods month over month from negative to positive. That's really, really good. 0.7, 3.2. 0.7 was expected. Excluding transportation month over month from negative expectations to positive also. Wholesale inventories less than expected. So less inventories, more orders, demand on the mortgages, and retail inventories going higher than expected, but this is excluding autos. I mean, this looks like not super inflationary, but at least it's showing some resilience on the economy and also supporting the fact that manufacturing is going higher. So good orders, also inventory is going a little bit down. So demand is helping getting rid of those excess on inventories. This is really, really interesting. And let's see what happens the rest of the week with the economic data for the GDP. Let's start talking about earnings. Yesterday, Microsoft and Alphabet reported earnings. Microsoft really crashed. Both earnings, EPS, and revenue, saying that the outlook is that artificial intelligence will drive revenue growth. So they are all in on AI, fueling the hype. So Microsoft is leading this AI hype and they are exploiting that fact. 2.45 versus the 2.23 on EPS and revenue, 52 billion versus 51. As with any significant platform shift, it starts with innovation, and we are excited to see that demand signals for the AI capabilities we are announcing and will continue to invest. So they are going all in, all in. This is a nice chart that shows you that despite these earnings, demand for Windows 11 and PCs are -28. But look at this, cloud pushing plus 27%, cloud services 17%, Office 365 fueled by AI 14%, cloud services with server products 17%. I mean, cloud is really, Azure is really, really pushing their growth. And this is quite interesting because this is what you would expect from Microsoft. This was really anticipated, better than expected, but I mean, they really crashed the earnings. If we see market's reaction, let's start from the daily because look at this. You know the importance of the gaps, right? This white box was the daily gap that we had on 29th of March. If we go to really low time frames, the 1 minute chart, you can see these kind of things. Look at this. Market fell off yesterday and see when we stopped. We really feel the gap almost to the tick. The low of this candle was 275 and the gap fill was 275.23. wow. These kind of details are wow. I mean, and then market really pushed after hours until almost 10%. We finished after hours, market closed with 8.40%. We held during the overnight. We took a little bit of dip, but once we established some volume lower, I mean, this just is going higher and higher and higher, higher lows, higher highs. We have a little bit of pivot up here at 299 with this rejection, but I think Microsoft is going to just go through every resistance at least until yesterday's after hours high. 300 is going to be insane, but I think there's a lot of bullish action in Microsoft, as you can see. Now, Alphabet reported revenue and earnings beat also for the third quarter, but we are going to talk about 70 billion share buyback. But first, before that, 117 versus 107 and 6980 versus 6990. Quite really good. Really good. At YouTube advertising barely beat, but still good. But the only thing is that Microsoft is really showing strength on the Azure and cloud services, but Google Cloud revenue was 7.49 billion expected, 7.45 slightly missed, but this is the first time that they are reporting growth on their cloud, Google Cloud services on revenue. That's at least something for the stakeholders. And it's overall this 3% growth for Q1. That's showing something. From 1% on Q4 last year to 3%. So Google is not as strong as Microsoft regarding cloud, but they are different sector, different kind of business, but at least they are showing that they are flexible, they are adapting to this kind of situation. So what Alphabet, what Google did on the after hours, well, they really show big volatility. I think that was like 4% or something like that. Whoa, more than expected. 6.56, and they closed around 2.37. And then we literally, in overnight, we touched that low, and I think people was not really, they were comparing with Microsoft, comparing with, well, not Amazon yet, because they are not reported earnings yet, but AWS is going to be insanely interesting. But Google shows some strength, some weakness into the open, then some strength. Now it's a little bit going lower, still in the green. But at least I think this is not as bullish as Microsoft. But I mean, this looks decent. Now let's talk about the share buyback. You should already see this kind of mechanism from stocks in which they announce buybacks. So they, following up last year, April 2022, 70 billion buyback. Now they are announcing another 70 billion buyback. Some people don't like this, but this is certainly bullish. They didn't release the price, but I mean, this is looking really good, at least for investors. So you have to really also take into account these kind of movements, because they are really investing on themselves. They are confident that they are going to continue growing. They want to just provide higher value for their asset classes. Finally, related with Microsoft, but not with earnings, Britain blocks Microsoft's 69 billion acquisition of Activision Blizzard. So as you should know, Activision Blizzard was initially announced on last year, 2022. They went from $65 share to basically opening at 86. But look at where we are right now. We are exactly at that same level we were until today, because regulators are saying no. This thing is 11% down. If we check this close until this is just 11.50. So gap up from ATVI and gap down. I mean, this is, I really don't like this. I'm a gamer, I'm involved with Blizzard, and also I would like Microsoft to really boost the games that Blizzard are preparing and producing, but this is not looking good, man. They are blocking, and this is going to be really, really difficult to end up acquiring. And I don't know, this looks really bad. It's sad. Microsoft is not being impacted too much, but Activision Blizzard is really feeling the pressure. Microsoft right now is 8.72 following after hours gap on earnings, and look at this. I mean, Microsoft is not feeling it, but related with that, you should know that news. So now that we finished with earnings, let's focus on the Nasdaq. Interesting things. Open really choppy. We got a nice double bottom, which we could have taken a nice long, but I waiting for this. I waited for this. This red line that is just jumping around is the development of the point of control. At this point, it was down here. Now we still have it down here, as you can see, but at this level, once we broke 12,940, this pivot, I took the long. I took the long around, it was around here, and I added for the break of this ascending triangle into 13,000. I added, I think it was like this after this bottoming tail. I was watching this ABCD, ascending triangle, things like this. This setup looks really bullish. I had a nice entry, and I was willing to add for exactly this move, the break of 13,000. I took profits. I started taking profits at 5 around here, and I had the other one up here at prior high for the full repair of this move, of yesterday's move. So this pivot was this pivot. We didn't reach that one, and I took profit, as I think, around here once we rejected in this candle. So really nice days for me long. I'm still bearish overall, but we have no news, no big news on the economic data. We had good earnings, and open interest on the S&Ps was higher. And I mean, this technical setup was something that day traders like me like to follow. You can always, if you are bearish, I was bearish, but I didn't take any position. I changed my mind once I saw this double bottom and this point of control switching down here, and it was really beautiful setup. Only technical. Sometimes the fundamentals, the lack of fundamentals push the market higher, grinding higher, but at least we had good earnings, and overall I didn't change my mind. I'm still bearish. But I think for an intraday move like this, it was quite nice, really technical setup. And I follow my strategy, follow volume, follow my levels, really careful with this blue dot line, 12,982. That's last week low that we crunched yesterday, but this push was on earnings was really beautiful. So that's for the Nasdaq. Other things that I was watching today, really interesting. You have to watch copper. Dr. Copper is called sometimes because it's an indicator, a lead indicator of the overall health of the economy. And look at this. That's why I'm still bearish overall for the mid to long term, because we are seeing weakness. Gold is seeing rejection. If we check the 5-minute chart, Look at this. This is not good. Treasuries. Wow, they are being destroyed. Dollar is seeing a little bit of strength of the golden pocket. Look at this bottoming tail, huge. So I think there's a lot of buyers at 101. They took almost 101, 101.13, but I think this golden pocket is being respected. And this, even though we broke down this after this move and this move, I mean, volatility is there, but the overall idea until we break this low, I don't think dollar is going to be piling up a lot of shorts. We are trying to stop the train down, but I mean, there's a lot of potential to the upside, and if we are going directly into recession and to do a deep recession, I think dollar is going to be really, really light. And other things, we review copper, we review gold, dollar, Bitcoin. Bitcoin is one of those things that sometimes does these kind of things, and in my eyes, I see this and I see risk on with big volume. Look at this. This is an 85 Bitcoin candle. And overall, the 2-hour, look at this. This is super bullish. On the daily, we are seeing this kind of this one is quite nice. Look at this. We are seeing this. This was a false move due to some fundamentals, but I think, I mean, 31,600, that was a level for resistance since June last year. And we are seeing higher highs, higher lows. I mean, Bitcoin looks good, and I don't trade Bitcoin, but I can see risk on these kind of assets. And I think that kind of risk on follow with some tech earnings. I mean, at least you can be a little bit bullish or follow certain setups like I did today. But we are not super strong. That's why we are not pushing. But something interesting is that we did repair yesterday's move almost to the tick. But this was an area I was watching for my targets. 13,015. 13,000 was already good. I added for that and I took my profits just in case we are seeing lower lows, and let's see if we can hold this blue dot line that is last week low. So we are reviewing other markets that are still showing micro. Look at this switch on the point of control. This is really, really interesting. If we break down this, I mean, shorts are going to pile in with volume defending at least 13,000, but I think last week low is going to also be defended. I don't know if we are going to retrace the entire move, but I'm seeing some kind of weakness, and at least Nasdaq is rejecting 13,000. That's a key level. So as I was saying, I'm seeing overall macro weakness, but this is a proof evidence that you can intraday trade certain setups that look really nice. Just get confident, manage your risk and your position size if you're trading shares, and if not, be careful with the futures. But this was a nice move. Some other things that I would like to bring to your attention. Last, I would like to review with you these kind of things that we usually review on this channel. Look at the sector performance. Sector performance on the last 5 days shows really something. XLP, staples, defensive sector. XLU, utilities, defensive, and healthcare. Technology is having a nice day due to earnings, but these three on top, I mean, be careful, be really careful. The rest of the sectors are down here. Staples are one of the best performers in a recession, and they know, Wall Street knows. I think they were rotating since days ago due to earnings being quite uncertain. But let's see, we have to follow these kind of rotations to see if they risk off or if they continue adding to the defensives due to poor earnings performance on the tech stocks. Remember that today we have Meta after the close, and we have tomorrow after close Amazon and Intel. Be careful because Wall Street are still on the sideline. You want them to be in this market, to be in your way, in the way you are trying to trade. Right now, I'm not full bullish due to that. I'm super bearish. They are also piling in a lot of shorts, volume, and the charts from smart money and dumb money. Look at this. Well, I already said that. So this change on volume, I don't know if there's any news. Let me check real quick. So no news and no news. First Republic is minus 20%. Wow. They tried. They are trying to rescue this First Republic Bank. They don't have an agreement yet from the bank sectors. The US government already said that they are not going to rescue anything. So let's see what happens. But I think this bank is going to be. So as I was saying, I don't know if Nasdaq had any fundamental reason, but I was expecting this kind of at least push to the downside. There will be a lot of shorts at 13,000, so be careful with that. We review everything, and apart from yields, well, yields are trying to decide what to do. The 2 and the 10-year today are in the green, and markets are still pricing in. This is December. They are still pricing in 4.5% interest rate from the 5% that we are going to reach on May. Most probably 85% of probability for a 25 basis points. I think this is too much. 4.5 is 150 basis point interest rate cut or 225 basis points. I mean, I don't think this is going to happen. So markets are still deciding, bonds market are still betting against the Fed. Big volume bottom, big bounce from a daily level. The blue line, this daily level they are still pivoting between this last week low and this blue daily level. So let's see how we end up today. Nasdaq is 1.23, super strong after earnings. S&Ps have 0.13 in the green, not as strong. That's for a reason. But be careful with the volatile days today, and be careful with Meta that is going to report earnings after market close today. 1.67. So they are betting for a nice earnings from Meta, but anything can happen. So be really careful. So as always, thank you for your time. If you found this video useful, please remember to click the like button, support the channel, subscribe to the channel, follow my videos. I'm really thankful and grateful for your subscriptions, for your follow through on my videos. Thank you for that. And I'm going to continue. So if you want to stay with me, I really appreciate that. But remember that the trading day is not over yet. We have the power hour and we are still seeing some nice volatility. Plenty of opportunities, but still weakness, some opportunities to the long side. So be really careful. And remember that discipline and risk management are key for your success. Stay safe, everyone.